So guys, in the previous session we were doing accounting standard 19 leases. In that we have finished off totally the accounting of finance lease in the books of lessee, in the books of lessor. The remaining part of the standard, very cheap. Next sir, put the heading accounting for operating lease in the books of lessee. Sir, what is operating lease, sir? What is operating lease? Textbook definition, it's a lease other than finances. A textbook definition. Who wants textbook definition? I want to understand. Sir, in an operating lease, the meaning is the lessee merely remains as a user of the asset. He does not in any way, directly or indirectly, enjoy the substantial benefits from the usage of the asset. For example, life of the asset is 20 years. This fellow has took the asset on lease only for a period of 3 years. After 3 years, the asset will go back to the lessor. Neither he has an option to buy, nor it's a specialized nature asset, nor PV of MLPs is equal to substantial the fair value of the asset. So none of the 5 criteria have been satisfied. Those cases of leases we call it as operating lease. In an operating lease, since lessee is not treated as a owner of the asset in substance, asset will not be capitalized in the books of lessee. Sir, every year we pay rent. Now what is the treatment of that? You tell me what is the entry for rent which you have been taught from childhood. Rent to bank, P&L to rent, same entry as it is you have to record. That's it, over. That's why operating lease will not be asked in the exam. But in this also one small point is there. How is that is, it's not like whatever rent you pay that will go to P&L account, not like that. Sir, whatever is due that will go, not even like that. Listen first, I'll make you read later on. Let's say the operating lease period is 4 years. The lease rents agreed each year are 60,000, 40,000, 30,000, 70,000. These are the lease rents that are agreed between lessee and lessor. Pakka operating lease. Sir, if I tell you a simple point that lease rent should be transferred to P&L account at the end of each year, the normal thinking what we get is lease rent account debit to bank, whatever I pay, and P&L account debit to lease rent. Every year, whatever lease rent I pay, that will go to P&L account as an expense. That's it, over. But our standard says P&L correct, but not what you are paying or not what you are supposed to pay for that matter. This should come to P&L on SLM basis. Straight line method lo, you release all this total lease rent into your P&L account, which means what is the total lease rent? Count everything. 40, 1 lakh, 2 lakhs, 2 lakhs. So what you got to do is a 2 lakh rupees uniformly over a period of 4 years. 1, 2, 3, 4. So 2 lakhs divided by 4. Every year you should transfer to P&L account an amount of 50,000 per annum lease rent to your P&L account. Which meaning, sir, transferring to P&L I will do 50,000 only. Credit means lease rent account should be closed by transferring it to P&L account 50,000. If lease rent account has to be closed by 50, it should be originally recorded also with 50. Otherwise, how can I close it with 50? But the problem is, you already agreed with the lessor that you will pay an amount of 60,000. To bank, you don't have a choice. They already agreed. You have to pay 60. Sir, entry not tallying, sir. Of course, will not tally. There is a balancing figure. Gap came. How much gap came? 10,000. How you must understand this is, according to AS 19, your expense is 50,000 only. But in reality, you went and paid 60,000. And did you pay extra? This is kind of a prepaid rent. You paid rent in advance. Sir, no sir, according to our loan document, either rent sir, doesn't matter. According to AS 19, excess portion is a prepaid rent. You need not go and write it as prepaid rent. You can open any account name with your choice, sir. You can call it as a lease suspense account. You can call it as a lease equalization account. Whatever name you want to give, you give. But that's nature is prepaid rent for this year. First year over, sir. Come to second year. Second year also I should transfer to P&L only 50,000. Which means the debit also should be 50,000. But as per the agreement, I will pay only 40,000. Sir, entry not tallying, sir. Very good. This time gap is coming on the credit side. According to E.Srinivas, I have to pay 50, but actually I am paying only 40. The remaining 10,000, you can call it as outstanding, but I will not call that because last year I already prepaid. No, I want to adjust that. So what I will do, I will not open any new account and all. Whatever lease equalization we opened in the previous year, that lease equalization account I will use it in the current year. Last year here amount is nil, here this side amount is nil. Coming to third year, repeat. This should be 50,000. E.Srinivas is talking about this part. Second entry. First entry based on your agreement you rate. How much did you agree to pay? 30,000. Pay that only. Booking of expense should be at 50,000. There is a gap. According to E.Srinivas, your expense is 50, but you paid only 30. Whatever you could not pay, throw it off into lease equalization account. Now it is in the nature of outstanding rent. 50 you should have paid, but you paid only 30. At 20 is an outstanding rent. It will stay on the liabilities side. Next year things will get adjusted. 50 is what I have to book here, but my cash outflow will be 70. So gap 20,000. If you see, by the end of fourth year, our lease equalization account naturally becomes 0. These treatments are. So it's not like whatever I pay will go to P&L account or whatever is as per agreement that will go to P&L account. No, because most of the times agreements, what happens is, sir, so for example, I took a machinery on lease from you for a period of 4 years. What I told is, sir, just now factory started. Now, initial years low high lease rent and I may not afford. So what you do is, first 2 years low rent, last 2 years high rent. The agreement lesser also accepted. Now, if I put this lease rents as it is into my P&L account, first 2 years little rent, last 2 years heavy rents, you know, I am beating out on my matching concept, which is wrong, because the asset is giving you benefits uniformly throughout the 4 years. So expense also should come to P&L account uniformly throughout the lease period. That is the logic behind it. Of course, our standard does say that SLM basis or any other basis which reflects the pattern of future economic benefits from the asset. If you tell me that, sir, every year equal benefits are not there, sir. In machine I am using, first year I am generating 1 lakh units. Second year I am generating 1,50,000 units. Third year I am generating 2 lakhs units. Fourth year I am generating 4 lakh units. If this is the pattern of consumption of your benefits from the asset, then your entire lease rent of 2 lakh rupees will come to P&L account in this pattern. 100 is to 150 is to 200 is to 400, R ratio. But generally, estimating such a pattern is difficult for the companies. And moreover, if they estimate also after 1 year, that fellow will say, in that one change in estimate is there, I have to revise. Who will bear all that nonsense for a stupid expense in P&L? So 99% people follow only SLM basis. In case you follow this one, let's say other than SLM, if you are doing based on your own assessment of your future economic benefits from the asset, in that case, same accounting, sir, because how much has to go to P&L is something which is already told by AS 19, either straight line basis this one or your own ratio this one. So amount is already fixed. No, what amount you want to send it to P&L account, first is second entry you write off. Lease rent amount you debit the same amount, whatever you want to transfer to P&L account. E amount should be same. Two bank is already decided by your agreement. A balancing figure whatever is there, throw it in lease equalization account, because in my case leases are equal. But if you want, if you open any other case, call it as lease suspense account and throw it out there. So it's like that, sir. So this is accounting you have to do. So just write 2-3 points. There are no big questions also on this. If you want to copy this example, you can. That's up to you, of course. The lessee in operating lease does not capitalize the asset. The lease rents are recognized in P&L as expense on a SLM basis or any other basis which reflects the pattern of economic benefits to be consumed from asset. That's it, over. Very, very easy scenario, sir. Just throw it off in P&L. It's too simple for an examination question, but you never know. Questions can come. I kept a question which I will make it done later on. Okay, this is with lessee books, sir. Now come to lessor books. Accounting for operating lease. In the books of lessor. So here what points we should keep in mind when it comes to lessor books is, sir, in a finance lease, the lessor fellow first de-recognized the asset because lessee capitalized. Here he will not do anything of that sort. Asset continues to remain in the books of lessor. He continues to provide depreciation also. Sir, then extra what accounting I got to do? Every lease rent is coming, book it as income in your P&L. Sir, how much income, sir? Straight line basis you have to record lease rents as income in your P&L. Straight line basis means irrespective of what you people wrote in your agreement, club everything, SLM it, every one amount will come, that only should go to P&L account as income. Sir, anything more I receive or anything less I receive, lease equalization account on the account you open and throw it off there. That's it, over. Very simple. Right, sir. Lessor will not de-recognize the asset. Lease rent is recorded as income in P&L on SLM basis or any other basis which reflects. Yeah, if you finish off the balance part, you are pro. SLM basis I told. Here also, here expense in P&L, here income in P&L. Okay. SLM basis was there, here also, above case law also SLM basis was there. Here also SLM basis is there. There one alternative was there. What was that? Any other basis which reflects the pattern of economic benefits to be consumed from the asset. Here what should I write? Same, huh? Yes, sir, that's why think. Sir, careful. When you are a lessee, let's go back to lessee case once again. Sir, I am a lessee, sir. I got this asset on lease. I am using this asset. For this I am paying rent. Rent is an expense for me. What is the benefit? Because the asset I am using, benefits will come. So the other choice given to you is the expense of rent should be matched with the benefits what I am receiving from the asset. Benefit expense both should be matched. Now come to the shoes of lesser. Lesser ki lease rent income. Income should be matched with a cost. What is that cost? Did you understand the point, sir? SLM is a plain principle, sir. If you don't like SLM, go and apply matching concept based on your own assessment. Since for a lessee, lease rent expense kabatti, the benefit though you have to match. But for lessor, lease rent is an income. You have to match with a corresponding cost. Who is that cost? You cannot say future economic benefits. Why? Asset he is using, somebody else is using. Somebody else is using. For me, economic benefit and all will not be there. In fact, this income must be matched with. Why is that fellow giving you income? Because he is using of your asset. Because of usage of the asset, asset value falls down. That is the cost. So this is supposed to compensate your diminution in the value of the asset. Rather, you can call it as depreciation in the value of the asset. So every year, by how much your asset is likely to depreciate, estimate that. Sir, first year 10%, second year 25%, third year 40%, third year, fifth year 50%. If that is a ratio you identify, a ratio low, you release this income to P&L account. Income if you are having, try to match with expense or cost. Expense you are having, try to match it with the income. So matching concepts or any other basis which reflects the diminution in though little over enthusiastical, I am telling you all this, nobody will ask you this. Question number 5. It's very simple for an examination perspective is what ICA feels. But if this question comes, many people will still mess up. An A Limited obtained an asset on lease from B Limited. The economic life of the asset is 10 years. Lease period is 4 years. So 10 years life flow lease is only 4 years. The lease rents agreed are 1 lakh, 150, 175 and 2 lakhs. The return desired by the lessor is 10%. You know, return desired by the lessor is IRR of the lessor. This is trap. Don't touch that. When they give you discounting rate, you may get tempted and do a financial solution there. Discounting PV of lease rents and all. Do not do. Are the traps, sir? Pakka operating lease. 10 years life flow, 4 years only is the lease period. 100% operating lease. Other conditions ka data is not there, so operating lease. A 10% is a trap. Show the accounting in the books of A Limited and B Limited. So A Limited is the lessee, B Limited is a lessor. Chalo sir. Lease rent per annum on SLM basis is equal to 1 lakh plus 1,50,000 plus 1,75,000 plus 2 lakhs. You total all the four, not required. Divide by 4. Final answer you tell. 156, 250. This is correct. This is only relevant. Sorry, the income or expense up. That's quite a funny question. Depends on lessee or lessor. Now first start with lessee. Accounting in books of lessee A Limited. One, 2, 3 and 4. So lease rent account debit expense, so debit expense, leave 1 or 2 lines, then write to bank, again leave 1 or 2 lines, then next entry you write P&L account debit to lease rent. How much should go to P&L every year? That's already pre-decided for me. 156,250. So how much should go to P&L? Predefined. Now how much you pay, that depends on your agreement. So here first anyway 156,250 is common here also. Fill up this. Balancing figure at once we will see. First fill up the rest of the numbers. To bank agreement 1 lakh, 150, 175 and 2 lakhs. Right. Now see what is not telling. Okay, this side you call it as lease suspense, you call it as lease equalization, whatever account you want to use. Balancing for 56,250, 6,250. Third year gap is coming on the top side. So whatever lease equalization you opened in the first year and second year, that gets closed in the third year and fourth year. Now what you will do is, as it is lesser books you have to do. Put the heading. Do on your own, fast. As it is means reverse entries. Concept as it is. For this boy, this is an income. So when you are writing the first entry only, carefully plan bank account, debit, leave one line or write off the entry, you know what will happen anyway. What is there to hide from you? 2. Lease rent. 2. Lease equalization. First year I will receive 1 lakh. Nevertheless, my income should be 156,250, which means I did not receive some amount, balancing figure. Second year also 156,250 is my income, but I received only 150,000. So 6250 is a balancing figure. Third year I happen to receive 175. Lease rent account debit to P&L. There you go. Sir, over till here. Now, next concept, sir. Leasing activities of manufacturer oblique dealer lessor. You do not have literally any question on this, but your study material does cover this concept at length. When if you go to your ICS study mat, you'll definitely find this concept. But on these questions are not there. But still, it's good to have an idea on this, easy only. Sir, till now, our background was this. If I tell you that this person is a lessor and this fellow is a lessee, this fellow gives asset to him. And this asset he is buying out from somebody. I pay money, I buy an asset, that asset I give it off to this fellow, and this boy over a period will pay me lease rents. This is how we have dealt till now. Now you tell me, sir, from this, lessor activity is earning profit or interest income? Purely interest income. In fact, the lessee also knows that lessor from where he is buying the asset, for how much cost he is buying the asset, how much rent he is charging me, ante how much interest income he is recovering from me, everything lessee also knows, lessor also knows, anta open deal. But sometimes it is quite possible that the lessor is not the buyer of the asset, rather the lessor himself is making the asset. That means there is no third party from whom lessor is buying the asset. So for example, look at this. This fellow is a manufacturer himself. And he is also the lessor. Now, he is giving the asset to our boy on lease basis. Do you agree if I tell you that this person, whoever is lessor here, he has a two interests in the transaction? Means two vested interests are there. One is profit on sale, the other one is interest income also. But in the above example, his goal was only to earn interest income. So here, objective to earn interest income. Whereas here, objective to earn profit on sale. Because I manufactured the goods, I will sell it at a higher price only. Plus, since I am not getting consideration immediately, I want interest income also. Accounting and all pretty much same, sir. Only thing is, what our standard says is, this lessor, only one point, sir. Lessor who is a manufacturer or dealer shall recognize, number one, profit on sale. How will you decide the profit on sale? Normal case like I would have recorded sale price minus cost price. Here very unfortunately I cannot call this as sale price because I am not selling it on paper. On paper this is a finance lease, no? So there is nothing in the agreement which is written as sale price. So what you will do is, take the fair market value of the goods minus cost of goods. Normal, if it is a real sale transaction, selling price and some number will be there. But on paper, this will not look like a sale transaction because I am giving it on lease. So you yourself identify one number as a sale price depending on the whatever is the market value of the goods. difference right away today, book it as sale. Sir, what about interest income? Coming, sir. Interest income to be recognized over lease period is equal to, okay sir, watch this if you want. Sir, cost of the goods sold is 100. Means ఈ goods manufacturing కి నా cost 100. Market loss fair value today is 120. That means if I sell the goods right now to anybody, they'll give me 120%, 20 rupees profit. But you tell me, sir, in the life of the asset or life of the lease, will you collect from lessee 120 or more than 120? Why more than 120? 120 I will collect if you pay me now or with a reasonable credit period. If you are taking 5 years time, why will I collect 120? I am not stupid. So whatever total cash flows I collect from the lessee, do you agree if I call it as GIL? What is GIL? Gross investment in lease. That is broadly the entire cash flows that you are going to get from the lease transaction. Imagine that is 150. Now you tell me, sir, 100, 120, 150 lo overall lessor ki gain is 50, correct? 100 cost me, I am recovering 150. But E 150 lo oka 20 is profit on sale. This you must recognize immediately, irrespective of when the money is collected, because whether it is a cash sale or credit sale, entire sale ka profit will be recognized the moment risk and rewards are transferred to the other party. No, a 20 ki delay should not be done immediately. Profit on sale recognized immediately. But interest income is something which you will have to recognize over the lease term. So how much I should recognize? 30. 30, how did I get it? Simple, gross investment in lease minus fair market value of goods. On this detail, not even a single sum is there as per ICA. So this is enough for you. In fact, there is more complications we can develop in this, but that much is not there, sir. ICA final loan they did not ask. Why to unnecessarily give it for you? Keep it simple, that's all. It's enough for you. Yeah. Sure, so this is about manufacturer dealer. The last concept of the standard is sale and lease back. Once you do this standard, bye bye. Sir, the name itself is indicating sale and lease back means we are selling our asset, will receive the money and all. Asset ka right is given off to other party, the other fellow is the owner now, but I cannot stay without my asset. So again brought the asset back on lease basis. I sold the asset first, then I leased it back. Sir, when anyway you are going to lease it back, why the heck did you sell it? Sir, I need money, sir. For example, let's say I am running a factory, textile factory. Last 3 years loss. If this year also I suffer a loss, I have to shut down the business forever. Our situation, worst situation I am having. Suddenly, God's grace, what happened is one huge order I am able to get. Huge order I got. But to fulfill this order, I have to buy raw materials. I have to hire back the labor who left me. I need to hire back the managers. I have to incur expenses, overheads and all. Money not there. If I introduce capital into the business and all, my existing outstanding credit or bank loan and all, they will fall like zombies and take away that money. So I cannot bring in money from my home even though I have it. So without disturbing the liability side of the balance sheet, I need to bring money on the asset side. Cash should come on the asset side. Liabilities low, equity gone, debt gone. Debt if I go and ask anybody, they'll beat me. Existing money I did not pay, no. Who will give me new loan? Nobody will give. Equity shareholders, outsider will anyway throw stones. Inside I am having money, but I don't want to bring in, because if I bring in, outstanding people will come and eat away that money. Just like your internal reconstruction case. You know, internal reconstruction, you see any sum, what happens is, you go and put a sad face in front of everybody saying that, see, I don't have money, please forego something, please forego something. You beg everybody or not? You beg. Last adjustment he says sufficient equity shares are issued to equity shareholders to bring money. ఆ money ఏదో first loan he can bring, no, he will not bring. First loan if he brings, ఆ money existing fellows will take away and you cannot have any face to beg. So first beg, make a compromise, make an arrangement, later on issue shares and raise money. When somebody is willing to pay money to you towards the end, why won't he be willing to pay in the beginning? He will be willing only, but I will not bring him in the first. Likewise. Anyway, come back to the story. I have a factory, order is there, money is not there to buy materials and all. The only asset I have is a machinery which is manufacturing the clothes. What I did, I sold the machinery. Money is there. The money, the raw material, people, labor, expenses, everything is ready. But to manufacture clothes, I need machine, no. Now machine is not there. Why? A machine is sold off. Again, bring the machine back on lease. Now you tell me, sir, this machine, based on which my entire life is there, will I bring it back for a temporary period or long-term period? Definitely long-term period. Do you agree that this is a sale and lease back where the lease is in the nature of finance lease? Imagine the asset life is 5 years. Today I sold off. Again I brought it on lease for the next 5 years only. That means, why did I bring it for 5 years? Adina main asset, sir, if the textile machinery only is not there, how will I do manufacturing of clothes and how will I export it? How will I get money? So without machine I cannot function, no. So obviously what I did is, I sold my main asset. Asset again I brought it back on lease. That to finance lease. This is example number 1. There is another example. Sir, this is my building on main road, sir. It is the corporate head office, which was we took this building some 20 years back. But in the last 20 years, we made a lot of money. We can afford a building in much more posh locality. Here, highway, metro, all nuisance, sounds, pollution. I don't want to stay here anymore. I want to migrate to some peaceful area. So immediately, I put it as sale. Luckily, what happened? A buyer came. He offered me a huge consideration and he's asking me to sell it. I never thought that I can sell it so quickly. But anyway, now that good price is there, I agreed to sell it. But the problem is, I did not identify another building yet. So what I told that fellow is, see, we will sell it to you, but you have to again lease it back to us for a period of 2 years. Within 2 years, I will find another building. I will make all the modifications and all what I need inside. Slowly we will migrate from here to here. This is deal, sir. Here also, do you agree there is a sale and again a lease back? But the lease of this building will be for a long term or short term period? Short term period. So this is a sale and lease back in the nature of a operating lease. Earlier case, sale and lease back was in the nature of a finance lease. Is SLB in the nature of operating lease. So depending on situation, it can be either this or that. Okay. Now, roughly I'll tell you, I'll make you it later on. Timing, just peacefully listen. Very interesting case. SLB finance lease scenario. Sir, this fellow is originally the owner of the asset. What he did is, he sold the asset. Fantastic. Of course, money he will receive, money part I am not writing. Again, he leased the asset. This time he is a lessee. And this lease is a finance lease. Finance lease or lessee, do you agree that we call him as owner in substance? Earlier anyway he was owner, now also owner in substance. That means, will you capitalize the asset again in the books of lessee or not now? Yes. Earlier also asset was in my books only, now also asset is in my books only. Correct? So what our standard says is, whatever drama you did, this is a fake transaction. Sale and lease back in the nature of finance lease is a accounting gimmick done, sir. In fact, you know, e asset if it is not there, I will not function. E asset inch kuda move out, sir. One paper I will write as if I sold the asset to you. You will pay me money. Another paper we will write as if I leased the asset from you. Every year will be paying lease rent to you. ఈ asset ఇక్కడే ఉంటుంది సార్. As an auditor, if you don't observe, last year also asset is yours only, now also asset is yours only, and a feeling will come. But in reality, some drama happened there. What is the drama? Observe. When I sold the asset, the other party, did he pay me money? Now watch only the blue line. I received huge money now. This money, I will again repay to that fellow in the form of lease rents. This fellow, whoever is the buyer of the asset, and now who is the lessor of the asset, he will receive the amount what he gave me back in the form of lease rents. Now, a broad view, if you observe, asset went out, asset came back, cancel asset. Rupees came now, huge amount, every year small amount is going away. What is this, sir? Loan transaction. Is a normal loan borrowing, sir. Go to a bank, ask money, take money, repay the money in installments. That is a simple plain borrowing, okay, financing transaction. This fellow disguised that as sale and lease back. Sir, why, sir? Why means simple asset? Earlier also I am the owner, now also I am the owner. Accounting point of view, earlier also asset was in my books, now also asset will be in my books. What changed? What changed? Earlier interest was not there, now interest is there. Earlier you did not have money, now you are having money. Meaning what, sir? Effectively you have made a borrowing. A borrowing you are repaying over a period of time along with interest. A sale and lease back in the nature of financing lease is a pure financing transaction. There is no sale, there is no lease back in reality. Look at dummy transaction. Sir, if it is a financing transaction, why to disguise it like that? Why can't you normally say, Arey, give me money, I will repay in 5 years. Why can't you say that? Why are you trying to do this? Security. Imagine, sir, I want money. You are having money. I ask you, lend me some money. What will you say? Where is the security? I shall go, this is my plant and machinery, take this as security. In case I don't repay, sue me and take this asset. In India, laws are very weak. Tomorrow I do not pay. You filed a case on me in court. What I tell in the court is, see, in my company 2000 employees are there. Into 10,000 people are dependent on this company. So many creditors are there, banks are there. All these are dependent on this factory. And the factory is dependent on this machine. Due to some reason, I am unable to pay debt. Allow me a time of 5 years. I will try to repay, is what I appeal in the court. Immediately court says, on the human grounds, we will grant it. From your point of view, think, you genuinely gave me money, I gave the asset as security to you, but still you can't enforce your right on the asset so easily. It becomes very difficult for you. Now, look at the disguise scenario. First I sold the asset to you. Now who is the legal owner of the asset? You are the legal owner of the asset. I am merely a user. The moment I don't pay lease rent, you royally will enter into my building, take my asset and you go away. By you are having the prima facie right because you are the legal owner. Sale and lease back in the nature of finance lease law, a person, whoever is in substance a lender, that fellow is legally becoming the owner of the asset. So in case of any default, he will royally come and snatch the asset and go away. Court cases and all later on, first asset he will take and he will sell it off immediately. What court case will you file? Damages you will have to file. So, recovery is easy, they disguise it like this. So first point, did you have clarity? That sale and lease back on a fake transaction. So in this, what you have to remember ultimately? Only one point, sir. Any gain or loss on sale of asset shall be deferred and amortized to P&L account over the period, over the lease period. So heading you should write sale and lease back in the nature of finance leasing. Under that one point. Sir, on one side you yourself are telling that this is a fake transaction and you are asking us to recognize gain as if it's a genuine transaction. Moreover, a gain has to be recognized over a period of time, and also you are saying, how is it all this matching, sir? Sir, in logic and all standard law they don't write, but I'll just try to tell you, nobody will ask you, there is no question on this, but still I'll try to explain. If you understand, it's fine, otherwise also it's fantastic, don't worry. Sir, balance sheet of A Limited. This fellow is having a machinery, book value 1 lakh, carrying amount, cost less depreciation value is 1 lakh. Today, this asset is sold at 1,20,000. Imagine fair value is also 1,20,000. Now what is the entry you will write for this sale transaction? Quick. Bank account debit 1,20,000 to machinery. 1,20,000, 1 lakh. There is a profit on sale. How much profit is there? 20,000. 2. Profit on sale. Guys, if this is only plain sale transaction, no discussion. This will go to P&L. But our case is not that, no. Our case is a sale and a lease back. So the first part of the story. Second part of the story, you are a lessee now. Now that you are a lessee, when you bring the asset back on lease, machinery account debit to lease liability, an entry you write. The entry will be recorded at PV of MLPs or fair value, whichever is lower. Imagine fair value got selected just for the sake of it, because that's easy to explain for you. This is what you record. Okay. Now what happened? Observe closely. After you writing these two entries, sir, balance sheet of A Limited, machinery account was 1 lakh. Now machinery starts appearing at 1,20,000. Bank 1,20,000. Lease liability 1,20,000. Profit on sale 20,000. Now if you go and do a broad netting of every number, once see what is happening. 120, 120 how much? 240. E 120. Again net 120. 120, 20 also remove. How much? 1 lakh. What was there before? Original whatever 1 lakh is there, now also 1 lakh only is there. Names changed, drama changed. Asset 1 inch also will not move in your business. Are you understanding, sir? Anta fake, sir. Anta fake. Reality lo, what happened is, you simply took a borrowing. In substance, it is, sir. Guys, when you borrow money, what impact should you have on your P&L? Every year. When you borrow money, P&L account, what impact will be having? Interest. Nothing else should change, isn't it, sir? The asset will be there with you only. Only P&L account, interest extra impact should come. Depreciation amount will change. If I borrow money and repay interest, no. But if you observe in this case, see what is happening. Suppose I tell you the life of the asset is 5, or let's say easy case, 4 years. So had I not done this transaction, in my P&L account, depreciation every year should have been 30,000 per annum. 1 lakh divided by 4 years. 1 lakh divided by 4 years is 25,000. I'm sorry, 25,000 per annum. But because I did this drama, now see P&L my impact. My depreciation will be 30,000 per annum. Don't you think my depreciation got inflated? Sir, when I borrow money, now P&L should reduce only to the extent of interest. Depreciation amount should not rise. But in this case, depreciation amount has risen. By how much? 5,000. Are you wrong only? No. We have to nullify that or not? What our standard says is, do one thing. You got a profit on sale? A profit on sale, every year, release it to P&L account on straight line basis. So, 20,000 rupees divided by 4 years. Every year, how much will I release, sir? Now, when I recognize profit over a period of 4 years, what is the impact? Net impact 25,000. As if you never sold the asset. Had you not sold the asset, impact on P&L would have been 25. Now you did dummy transaction, sale, lease back, you do play whatever you want. Our standard says, lastly chepta what I have to do. Single shot answer. Gain amortize it to P&L credit side. If you do that, your entire drama will be wasted now. Your P&L will bear the same impact what it used to have earlier. Extra interest will come. Interest will come because you borrowed money. Are you understanding the sale and lease back in the nature of a finance lease? Every year this happens. Second year 30, another 5. Third year 30, another 5. Fourth year also like that. So we'll ensure that your depreciation impact is normalized. In a way, this is before and this is after. The after effect and before effect should be same, sir, because you really in substance did not sell the asset. In substance you borrowed money. Borrowed money, interest, let it come to P&L, nothing else. Sir, depreciation amount is changing, sir, don't worry. That automatically will be taken care of when you amortize the profit to your P&L account over a period of the lease period. This is profit amortization each year. So that is the treatment of sale and lease back in the nature of finances. I hope you understand, sir. There is only one line you got to remember. This, that's it. Chalo, sir. Next. Sale and lease back in nature of operating lease. Sir, exam point of view, highly important. Your stock question, sir. As if reservation is there, every 3-4 attempts, once it has to come. It will come. Important, very important. Slightly might be confusing, but important. Now think and tell me, sir, when I do sale and lease the asset back on an operating lease, do you feel it is a dummy transaction like the above case? No. Why? Earlier I was genuinely owner, now I am owner in substance. No, I am merely a user. Sale and lease back in the nature of operating lease cannot be a fake transaction like this. It is fake. Why? A remaining life of the asset, you lease the asset, no. So earlier also asset was with you, now also asset will die in your own hands. Only thing is you received money today, money you will repay over a period of next 5 years or 4 years. So sale and lease back in the nature of finance lease is a fake. That is in substance borrowing transaction. But operating lease is a genuine transaction, is genuine sale. Okay, now here I'll write one by one point, sir, and I'll try to explain. Watch out. First point, write along with me. When asset is held for sale, if carrying amount ante book value, sir, don't think otherwise. Carrying amount of asset exceeds the fair value of the asset. Then such excess shall be, what is that? W by O, wife of a, written off to P&L account immediately. E case little less likely, but in case if it comes, E principle you have to apply. Now meaning I will tell you, watch out. Sir, there is an asset. Let's say machinery is there, or let's say building is there. E building carrying amount is 100. I decided to sell the asset. Nobody came till now, but I casually inquired what is the market value. It is 90. Don't you feel that your asset is sitting in the balance sheet at a little fat value? Its worth is how much? 90. But book value is, when your range is 90, why are you sitting in the balance sheet at 100? You are obviously overstated. No. How much loss is there? 10. A loss you book right now. Sir, I did not sell. No, sir, doesn't matter. Do you have intention to sell? Yes. And if you do so, are you likely to suffer a loss? Yes. Book it off. Book it off. So, since carrying amount is greater than fair value, loss of rupees 10 is to be recognized immediately. So this is what you do. You book up the loss. It is first principle, sir. In some cases they ask, just be watchful on this. Remaining stories separate, sir. Gain or loss on sale in these three cases are there. First case, when selling price is equal to fair value, gain or loss on sale is transferred immediately to P&L account. That's all. This is an absolute plain vanilla situation. Just watch out on this example if you want. You can write this also if you want. Sir, there is a building, sir. Carrying amount 50. Balance sheet I wrote means a carrying amount. Selling price today is 60. Fair value of the asset also is 60. Tell me, sir, what is the gain on sale? Gain on sale is 10. Under 60 minus 50. Don't laugh, answer correctly. Is 60 and whatever I wrote, which 60? Selling price 60, fair value 60. Both are same now, sir. How does it matter? Don't joke. Tell me which one is correct. Good. Sale price 60. Selling price minus carrying amount. P&L immediately. For this, if you want entry, you may write it bank account debit. Sir, this is for some reason supposed to be very confusing to a student point of view. So please pay attention, sir. There are cases coming now. It'll be easy only. There's nothing very confusing. Pay attention. Don't try to remember anything. Just understand logic and leave. Later on, everything will compile again. Case 2. If sale price is below fair value, in this case 2, 3 points are there. I mean, 3 different treatments are there. Point number A. First you write, later on I will give you an example. In case of a profit, recognize in P&L immediately. So this is pretty simple, like the above case. In case of a loss, means you definitely suffered a loss. In this case, 2 scenarios are possible. The loss is compensated in future by paying lower lease rent. Possibility 2. The loss is not compensated in future. That is totally, this is a distress sale. You know you are suffering loss, but you anyway sold it because you are in need of money. In this case, defer and amortize the loss on sale. In this case, recognize the loss in P&L immediately. Right now you have to recognize. These 3 cases key example logics, if I explain, then slowly you will be able to remember this. Important, sir. Definitely important exam point of view. Chalo sir, let us try to think on this. Sir, people wrote, whoever is writing? Yeah. Okay, watch out. Building carrying amount 50. I want to sell it. Again, I want to lease it back also, operating lease. Market low fair value is 60. One fellow came to me. He walked the building, top floor, bottom floor, ground floor. He inspected 3-4 times and then he comes and tells me, I'm the owner, no, he comes and tells me, sir, I want to buy your building. Then I said, very well, how much is the price? He says, sir, I will give you 56 lakhs. What I will tell him is, get out. Why? What is the market price? 60. He is offering me how much? 56 lakhs. That is way below the fair value. Now what our standard principle here is, even though your selling price is lower than the fair value, if you are making a profit, recognize this profit immediately. Don't do any analysis here. Which means for in this case, gain on sale is how much, sir? 56 minus 50, which is equal to 6 lakhs, is recognized in P&L immediately. Sir, ideally you should ask him to get out now. Why did you sell it at 56 lakhs? Generally you think, sir, Even though market value is 60 lakhs, who will buy the asset from you at 60 lakhs with a condition that again they have to give the asset back to you only on lease for a period of another 3 years. So normal sale is different. Whoever will buy has full powers to do whatever he wants with the asset. But my case is not like that. I will sell the asset. Asset will be under his power only. But there is a small condition. What is that? The asset I will only use. I will not move out of this building for the next 3 years. Isn't that a kind of a restriction? So even though there is a profit, overall, you see, if you observe like this, there is a loss. But overall, if you see, there is a profit also. Standard says, I don't care why you sold at a loss. Means loss in sense, why you lost 4 lakh rupees, I don't know. But overall, the book point of view, there is a profit. Recognize that profit immediately. So we recognize it, sir. I will come back to the case in a while. Come to the next example. I will further explain this after some time. Second example. Balance sheet lo building is there 50 lakhs. Fair value 55 lakhs. Sale price 48 lakhs. This time you see guys, I am having a loss on sale. Selling price is 48, carrying amount is 50. There is a loss of 2 lakhs. When you are suffering a loss, our standard is asking, Babu, why did you suffer the set at a loss? Now, in this, why the asset is sold at selling price below fair value, that too at a loss. For this, 2 answers I can give you. Reason 1, I, owner of the building, urgent need of money. I want to shift to US right now. So what did I do? Whoever came, whatever price they give, I am willing to sell. Sir, don't I know that it is a loss? I know, but I am anyway selling it. You know, there are certain groups where people who are migrating to outside India, their properties, their furniture, their air conditioners, their car, they sell off and go. There are separate groups there. So there is a market because those people are in urgent need of money. So little lower price you can bargain there. So there is separate market again. Second hand market, special market. Like this case. Or this fellow is in deep financial trouble. He wants cash. So he sold off. So reason 1, distress sale. I am in distress. I need money. Standard says, okay, don't cry more. Transfer loss to P&L immediately. So your entry should be bank account debit to asset. Bank is 48, asset carrying amount 50, loss 2, loss will be transferred to P&L. This is a reason, sir. Distress sale. Reason 2 is a very interesting scenario. What he says is, listen to the story from the beginning again. Market value 55 lakhs. I want to sell the asset. Somebody comes and offers me 48 lakhs only. Very cheaply he wants to buy the asset. I tell him, array market value 55 lakhs. You bargain around 54, okay. Pay me 56 also, okay. You are asking for 48. Get lost, I told. Then what he says is, sir, hold on. Listen to my proposal completely. What is that buyer ka proposal is, he knows that market value is 55, but he does not have 55 lakhs. He has only 48 lakhs. What he tells me is, sir, accept 48 lakhs now. Then in future, I, who am the present seller of the building, in future I will be a lessee. In future when I become a lessee, I have to pay lease rent. When normally I have to pay every year 4 lakhs lease rent, he says he will charge me only 3 lakhs. That means he is asking me to sell the property to him today at a lower rate, and he will compensate the loss to me by charging a lower lease rent at a future date. Is this agreement sounding good for you? See, I am presently suffering a loss, but am I getting compensated for that loss? Yes. How? By paying a lower lease rent. So in a way, can I say that a loss whatever I am suffering actually is not a loss, but a kind of a prepaid rent. I suffer loss now. Future law I need not pay high lease rent, normal lease rent I am paying. It's as good as I paid something now only. In future I need not pay. A loss is something in the nature of a prepaid rent. When there is a secret agreement between the seller and buyer as to their future conduct of lease rents as lessee and lessor. So reason 2 is loss is compensated to seller in form of reduced lease rents in future. If that is the case, what our standard says is E2 words, defer and amortize the loss. Sir, defer and amortize the loss means what is the entry I should write? You tell. I'll tell you half entry if you want. Bank account debit 48. Asset I have to remove with carrying value 50. Loss is coming as 2. E-loss, earlier case law we transferred it to P&L. Now don't do that. This you call it as a deferred rent. On separate account you open. Or deferred loss. Whatever name you give. Nature is prepaid rent. Name can be deferred loss, but nature is prepaid rent. Sir, in future what will happen? In future what will happen means, look at this. Sir, normally, just for understanding, sir, don't take it very seriously. Normal lease rent is this. But agreed lease rent is equal to this. Meaning, instead of paying a high lease rent, you will be paying only a lower lease rent, which means every year to your P&L account, what will come is normal lease rent will come. First year, second year, like that. When a deferred loss, when I release it to P&L account, what will happen is a loss also will come here. In second year also this loss will come. Like this every year it comes. And it will kind of ensure that your overall lease rent expense or the debit to P&L account will be kind of equal to your normal lease rent. You do whatever stupid agreement you want to play, you play. My accounting treatment, I will correct it. That is AS 19 ka answer for that. Did you understand this, sir? So tell me, sir, when you sell the asset at a lower price, there are 3 cases we discussed under this only. Number 1, you got a profit. When you get a profit, don't do any analysis. Profit straight, take it to P&L account, be happy there only. If you get a loss, ask yourself, why did you sell the asset at a loss? If you say that, sir, I am in need of money, I sold the asset, then there is no discussion. Is your future lease rent compensated in this case, sir? No. So the genuine loss, throw it off to P&L. But if your future lease rent is charged at a lower rate to compensate the present loss, then what our standard feels is this is not loss, in fact, this is prepaid rent. You prepaid rent every year transfer it to P&L account. Defer and amortize. Are we clear here, sir? Right. I'll ask you a doubt, but you should not get confused nor give up on this concept. Should I ask? If you're confident, I'll ask, or else let's skip it. Okay. In transaction, what is the amount of loss? 2 lakhs. Or the accounting loss. Common sense loss. Common sense laws tell, sir, if that fellow says in future he'll give you a compensation of 2 lakhs worth of discount, will you accept? I'm that stupid. No. Sir, the 55 lakhs worth of building, sir, I'm selling it for 48. My loss is 2 lakhs. 7 lakhs. అది books లో కనిపించదు అది. Sir, you purchased a asset once upon a time for 5 lakhs, sir. Today market lo value 50 crores. You sold that asset to somebody for 7 lakhs. Stupid P&L account profit, it will be visible. అది profit. Profit sir అది. అది accounts ఉన్న limitation, sir. We can't help that. Okay. Fair value 50 crores, you bloody sell it for 7 lakhs, your P&L still reflects a profit on, sir. అది profit sir అది. 50 crores what you are supposed to sell, you sold it for bloody 7 lakhs. అది accounts ఉన్న limitation. Now observe here. ఒక 55 lakhs asset, if I am selling it for 48 lakhs, the real genuine loss is 7 lakhs. My future ka compensation also should be 7 lakhs. If that fellow does not agree for this, I will not enter into this agreement in the first place only. Okay. Now, so my genuine entry should have been this. Bank account debit 48. This I can't stop. Asset should be eliminated with carrying amount. Idi correct. Can loss should not be 2 lakhs. Tell me, ask yourself, are you really having a loss? Today book point of view loss is there, but that fellow agreed to compensate, no. If he agrees to compensate to you lease rents worth 7 lakh rupees, it is as good as 48 you received now, 7 you are going to receive in future. Where is loss for you? Loss unda? Loss ledga? So, ideally I should write deferred rent or prepaid rent, whatever name you give, that is 7 lakhs. To profit on sale 5 lakhs. ఇది రావాలి సార్ మీ ఎంట్రీ ఐడియల్గా చెప్పాలంటే. Because the real compensation for me in future is 7. 48 anyway cash I received. Effectively 55 is a consideration. Carrying amount 50. Gain should be 5. But you know, our standard does not accept this. Standard says do this. Sir, why sir? Why? This is only sounding correct, no? If you observe correctly, it is sounding correct. But in this one small problem is there. What is that is? If you do this, what is appearing as right, you are violating slightly conservatism principle. What is that is? You are postponing a loss and recognizing a gain today, which our standard does not want. So what our standard asks is, net that 2 accounts. Net these 2 accounts and write the entry. Bank account 48, deferred rent 2 lakhs, to asset 50. R2 coincidentally is loss on sale when you compare selling price and carrying amount. Like that, entry came. But entry is the background, sir. He both netted off here. Like that. You cannot recognize a gain today by postponing expense into a future date. Our concept lo entry we are not writing, and we are writing this entry. So to explain this entry, I need not tell you the story, no. I can simply say, array, what is the loss? Last 2 lakhs are deferred and amortized. And simply we teach. What is the background? The books so nobody will write. But if you develop thinking, no sir, definitely it will help you. Complicated standards will appear very simple to you. Understand the intention, principle behind any provision. The books so they don't write. Chalo sir. Now even if you do not understand all this, don't mind. Just you chart whatever you wrote here, you remember this. Same is the case, sir. Look at example number 1. I told you I'll come back here. I came back. What is the entry? Bank account debit. I sold it for how much, sir? 56. To building 50. To P&L account 6. Carefully observe. In this also, my real gain is not 6. Actually, I should have sold the asset for 60 lakhs. But like a fool, I sold it only for 56 lakhs. Why, sir? Why, sir? Again, 2 reasons. One, I need cash, I sold off. If that is the case, nothing doing with the correct entry. If you tell me that, sir, future low, I get compensation, sir. Okay. If future low you get compensation, what is the correct entry you should have written? Bank account debit 56. Deferred loss or deferred rent expense is 4 lakhs. To building 50 lakhs. To P&L, I should have recorded 10 lakhs. This would have been entry. In this also, observe the same mistake you are doing. What is the same mistake? You are postponing an expense to a future period and booking a profit today. Standard does not like it. It says net of these two. కాకపోతే ఇక్కడ P&L is more credit. So E entry is the net effect. But who will think all this, sir? Directly can't you remember the chart and do? Now why I am telling you this is, you will ask me, sorry, 3 examples lono you sold the asset at less than fair value. When you suffer loss, then only you are asking reason 1, reason 2. When you get a gain, why did you not discuss that? Even if I discuss that also, it's of no use because this will happen. Even if you tell me that our future compensation is there and all, okay, then I should write this entry. If I write this entry, principally I am doing one mistake. What is that? I am booking a gain now by postponing an expense to a future period. Standard says no, not acceptable. So you net off these two, it will come like this. For teaching you this, I need not tell you the story, no. Directly I can tell you. So why certain aspects are not addressed in the standard is this, because it is addressed indirectly. If you think, you will get all these ideas. Sir, are we clear or I am creating more confusion now? More confusion, no? Okay, let us, I will only remove it. Wait a minute. Case 3. Last one, sir. In fact, almost the last point of the standard also. Case 3. Selling price higher than fair value. Here principle I will tell you later. First example, you tell me the answer. Later on I will make you write that answer only. Of course, only if your answer is right. Building carrying amount 50. Okay. Fair value of this asset is 56 lakhs. Some buyer came. He says, sir, I will buy the asset from you at 60 lakhs. I told, sir, fair value is 56 lakhs only. But he still wants to buy the asset at 60 lakhs. Tell me, sir, why would anybody pay me more than the fair value? Sir, he desperately wants to buy the asset, sir. Even then, I am willing to sell it at 56, no? Or if not my building, adjacent building he will buy at the market price. Why is he want to pay more to my asset alone? Listen, again story, background. But this time it won't be that deep, it's simple. Sir, I am the owner of the building. You entered into my building. You asked me, sir, I want to buy the building. I said, price 60 lakhs. You said, sir, market le 56 only, no, sir. Market le 56, but you have to pay me 60 lakhs. But you ask me, sir, why 4 lakhs extra? Then what I tell you is, I am in urgent need of money. I am in urgent need of money. Then you tell me, if you are in urgent need of money, why should I pay you 4 lakhs for your daughter marriage? And you will ask me, no. You will ask. For that my answer is, no. You pay me 4 lakhs high now. In future, I have to pay normally this much lease rent. I will pay this much lease rent. That means, I am asking you to pay higher consideration to me today, and the higher consideration I am going to repay it back to you in the form of extra lease rent in future. The agreement is possible or not possible? Very much possible. Now you tell me what should be the correct treatment. Tell sir, you are not that bad. Okay, first gain on sale we'll see first. Gain on sale formula never get confused. Always is the same, sir. Fair value అనేది ఒక జోకర్, బట్ గెయిన్ ఆన్ సేల్ ఫార్ములా ఇస్ ఓన్లీ దిస్ 60 minus 50, 10 lakhs gain came. Now tell me, in this 10 lakhs how much is genuine gain? Him, sir, 6 lakhs, sure, all of you, right? Up to 6 lakhs, is there any secret agreement and all? No. So what you do is, gain to the extent of rupees 6 lakhs. 6 lakhs, how did you get? 56 minus 50. That is nothing but fair value minus carrying amount. E 6 lakhs P&L immediately a balancing figure. Tell me, sir, ఇది genuine gain future లో have to తిరిగి ఇచ్చేయాలా? You have to give it back, no? Yeah, the fake gain. This one, defer and amortize to P&L. If I amortize to P&L, what will happen, sir? This is nothing but selling price minus fair value. If I amortize to P&L, what will happen? It will go to credit side or debit side? Profit your side will enter into credit side. Already debit side lease rent is fat. So heavy expense compensated by a income. Net expense will be normal lease rent. Did you understand this, sir? Not so as simple as that. Only one case in this. Sir, no, sir. God promise, sir. Such a secret agreement is not there. That fellow is God, sir. He came and gave me extra 4 lakhs. Case ki study matter means your AS 19 does not address that. It feels that nobody will be God. So normally, who will come and pay 4 lakhs extra, sir? You ask 4 lakhs extra, okay, take and he'll give off. No matter how much rich you are, 10 rupees note is there means you will bend and pick up, no. So nobody will give you money freely. I say consumption. Anyway, that is that. Okay. So to summarize this entire stuff, three cases, sir. Selling price is equal to fair value. Selling price less than fair value. Selling price more than fair value. When selling price is equal to fair value, gain or loss in P&L immediately. Only one point, sir. When selling price less than fair value, here if you get a profit on sale, P&L immediately. If you get a loss on sale, if you get a loss on sale, I have questions for you. In future, compensated, then answer is defer and amortize. Not compensated. And what are you waiting? Die in P&L immediately. When selling price is more than fair value, no idiot is going to pay you free money. Pakka compensation. Futurely he will charge higher lease rent, that's why he is paying you higher amount today. In this, fair value minus carrying amount will go to P&L immediately. Selling price minus fair value will be D and A. Defer and amortize. That's also. ఇది ఒక 5 marks very popular question. అసలు ఏ లాజిక్ you need not write. Directly treatment if you write, that fellow will be more than happy. Generally, which place a student will get a doubt is, అసలు సార్ ఈ కేసు ఇది మొత్తం లాస్ కేస్ యాక్చువల్లీ when you are selling at a lower rate. Why are you selling at a lower rate? And a discussion should come. Instead of that discussion coming at this stage, that fellow will open the discussion only when you suffer a loss. Profit low, why did you not open the discussion? Even if you open also, there will be a small violation of conservatism concept. That's why we don't ask. That's all, sir. Over. This stand is done. Remaining questions are there. Pick up quickly. We'll finish it off. Copy it, sir. Whoever is writing this. Yeah, please pick up question number 7 in page number 74. 1 second, sir. I just wanted to see one extra question. If it is there, I have to include that. Otherwise, it's okay. Okay, sir. Please come to 7th question. On 1st October 2011, Omega sold a property it owned for rupees 900 lakhs. It is sale price. And leased it back on a 10 years, very clearly he is telling operating lease, for a rental of 80 lakhs per annum, payable on 30th September in arrears at the end of each period. The carrying value of the property in the financial statement of Omega on 1st October was 550 lakhs. This is the carrying amount, sir. But I sold it for how much? 900 lakhs. But market value is only 700 lakhs. Tell me guys, ideally I should have sold it for 700. But luckily I managed to sell it for 900. In this some fake profit is there or not? Fake profit ka meaning somebody gave you money in advance which will recover it from you by way of higher lease rents in future. Which case? Case 1 or 2 or 3? Case 3, where the selling price is more than the fair value. Compute the amount that will be shown in P&L for the year ended 30th September 2012 and the statement of financial position. Statement of financial position is overaction done for balance sheet. And the position balance sheet on 30th September 2012 in respect of the sale and lease back. Sir, first you tell me entry correctly, sir. If you tell me the entry correctly, rest of it naturally will come. Tell me, today is 1/10/2011. That fellow will write his story, let him write, you tell me the entry. If you want, I'll help you with half. Bank will be debited with 900. Another half also I'll help. Asset will go with 550. Now tell me, remaining part. 450 P&L, 150 P&L. Okay, nice. 2 P&L, 150. 150, how did you get, by the way? This will be fair value, which is 700 minus carrying amount of 5. The genuine profit only will go into P&L account. Fake profit will not go. So, 2 deferred gain. 250. How much is it? 200. 200. Here you can call it as balancing figure also. You can work out also. How will you work out this? Selling price 900 minus fair value 700. Extra whatever you received freely, that is not gain. Nobody will give you freely 200 lakhs. Now tell me, what will happen to the 200 lakhs in the next 10 years? Every year you will credit to P&L. How much will be the credit to P&L? 200 lakhs divided by 10 years. Calculator kavala, sir. Scientific calculator one. 200 lakhs by 10 years, how much? 20 lakhs. Every year you will pay lease rent. How much lease rent is there? Debit side. Read the question. 80 lakhs. So P&L debit 80, credit 20, net impact 60 lakhs. That is P&L impact. Coming to balance sheet. Asset will not appear in my books because I already sold off the asset, I gave up. I got the asset back on lease, but that is an operating lease. So asset will not be capitalized. But he deferred gain 200 low, okay, 20 already went to P&L. Remaining 180 will appear as a liability in the balance sheet. E 180 low, 120 is going to come within the next 1 year. At the current liability. Remaining 160 will come to P&L beyond the 12 months. That's a non-current liability. That's what he expects. If you write all this, then he will give you marks. Entry law, what you understand is accounting position is correct. But that fellow is asking presentations. Balance sheet law, what will you show? Today 200. But by 30th September 2012, out of this 200, 20 will go to P&L credit side. Remaining is 180. 180, did you receive money or not? Already? Yes. Future you have to pay or not? Indirectly in the form of higher lease rent? Yes. Pakka liability. 180 liability. 180 lo Within next 12 months, how much will come to P&L? 20. That fellow will go and sit under current. Remainder will go and sit under non-current. You write, draw balance sheet format and show, it will be extraordinary. That's all. The remaining deferred income balance of 180 lakhs will be included as a liability in the statement of financial position. This is foreign author సంబంధించి the copy itself. In US GAAP and also in IFRS, there is no term called as balance sheet. They call it as statement of financial position. Rupees 20 lakhs of this will be a current liability and 160 lakhs will be non-current liability. That's it, sir. And P&L impact we already discussed. That's all. Come to eighth one. On 1st Jan 2006, Milestones Limited sold equipment to Indiga Limited for rupees 12,28,920. Quite an ugly number. Sale happened. The carrying amount of the equipment on the date is 2 lakhs, which is a carrying amount. Okay, fine. The sale was a part of the package under which Indiga Limited leased the asset back to Milestones Limited for 10 years term, and the life of the asset is also 10 years, it seems. Very good. This is what, sir? Sale and lease back in the nature of a finance lease. If the sale and lease back is in the nature of finance lease, so much of discussion is not there. Simple one point. What is that? Gain on sale, D and A, defer and amortize. Because sale and lease back, when it is in the nature of finance, is observe closely, sir. Today, carrying amount of the asset is how much? 2 lakhs. Your sale value is 12,28,920, which must be generally the fair value. So today asset is going away from my books at 2 lakhs. Within next 1 minute, other asset again I will record in my books finance lease model at 12,28,920. Because of this, asset value increased or not? The increased value will inflate the depreciation of future periods. Our depreciation have to nullify now. How will it nullify? Our profit, whatever is there on sale, go and credit to P&L over the remaining 10 years. So check how much is the profit, sir. 10,28,000 something. 10,28,920. 10,28,920 will go to the credit of your P&L over a period of 10 years. So every year, how much credit, sir? 1,02,892. 102,892 will be credit to your P&L. Next, asset will come back now and will sit in the balance sheet at 12,28,920. On this depreciation you have to charge. How much depreciation will come every year? 1,22,892. So every year what will happen is 122,892 debit will come, 102,892 credit will come. Net debit, if you observe, that will be a stupid 20,000. As if you never sold the asset. Had you not sold the asset and simply borrowed money from somebody instead of doing all this drama, the asset would have been still appearing at 2 lakhs, remaining left 10 years, your depreciation would have been 20,000. Effect you have to create. Did you understand, sir? It is sale and lease back in the nature of finance lease case. He is further telling how will you present all this in the balance sheet. Now you see, 10,28,920 rupees you deferred. The liability, liability some portion you credited to P&L account of first year. Remaining balance, whatever is there, instead of showing it as a liability, he says present it as a reduction from the asset. Credit balance into liability is, sir, but every credit balance need not be a liability. Why? Your deferred income, in this case deferred profit, whatever is there, that does not technically satisfy the definition of liability. Go back slowly, flashback. AS 29 liability definition. Present obligation arising as a result of past event, the settlement of which results in outflow of economic resources. Sir, a profit you have to pay to somebody. Is there any obligation like that? No. So therefore, even though it's a credit balance, you are doing it to offset your depreciation component. but not to pay this money to somebody, no. So technically it is not a liability. So don't show it as a liability, rather present it as a reduction from the asset. If you do that, your asset ka value is now appearing at 1,80,000. What is 1,80,000? Had I not sold this asset, the asset today will be appearing at 2 lakhs. End of first year 20,000 depreciation, asset ka net book value would have been 1,80,000. As if the asset was never sold. A picture you will create, not only in P&L, also in balance sheet. Are you understanding, sir? Sir, if this sort of questions comes, principle is important, sir. You can't remember all this and go, no. Principle, if there is in mind, P&L, this picture should come, balance sheet, this picture should come, prima facie sale and lease back, another fake transaction, and if you know, all this naturally will come into your mind. You don't remember anything. That's the reason I never read any of their solution. Never. What's the need for reading? Even when I'm a student, I never read. Why? Anyway, I'll not remember that. I know what he is writing there. Background I know. Whatever I know, I'll write. Why will I not get marks, sir? Everything you know, if you write, who the hell will stop you from getting marks? A heading, analysis, facts of the case, conclusion, all that will be nice to hear. For writing, it won't be good. You know, generally students will have this kind of mindset. Facts of the case, provision as per standard, conclusion. The first question that fellow will write, poor student. But all questions you do not know that much of deep analysis, no. Second question, sir. So one question will be like this, one answer. Second answer will be in some other format. So that you yourself are committing, sir. Don't raise your expectations. Keep normal. Sir, my answer sheet when I used to be a student, each answer different writing style. My handwriting was very bad. It's good only, but exam it was bad. Not our paper, no. I used to write like this only. Exactly like how you are seeing. Exactly like all this I used to write. One line after line. I used to leave, not my paper, no. Every half an hour, new sheet I used to bring. People used to think I'm writing something. I'm wasting pages actually. It's easy for me to locate. I write quickly. My writing I don't care, no. So just leave 1 or 2 lines between each sentence and write. Make it big. Answer will be correct only mostly. Of course, if after doing all the efforts answer is wrong, you will not get any marks. That's a different story. Okay, question number 9. I did one stunt in my IBCC, which you are not supposed to do. When I wrote first attempt, I got 67 in accounts. At the time, 2 accounts. Accounts 1, accounts 2, single paper. I tried for a rank, I did not get. But next time I wanted to get a rank, but the exemption with a rank you will not get. I took stamp paper, bond paper, wrote to ICI, surrender the exemption. Accounts exemption, audit exemption. 2 exemptions I surrendered. Next time wrote again. That was quite risky. At that time, like, intern Nibba, no? So full Josh was there. So I did. Luckily, I got 91 next time and a rank also. But that was quite an effort. Not to be tried, sir. There was, apart from effort, there was a lot of luck also, which is riding on my side. So it worked. Today, asla provision not there, it seems, what I understand. Last time somebody asked me, there is no provision to surrender your exemptions like that. Who will surrender exemption? My father was went back, don't do this. I cried, I blackmailed him, ultimately I made him only do all that work. So, yeah, that was quite an adventure actually. A Limited sold JCB. What is JCB? You know JCB? JCB memes you saw? Nice. A Limited, UP, JCB, you don't know? Uttar Pradesh, yeah, that. A Limited sold JCB having WDV of rupees 20 lakhs to B Limited for rupees 24 lakhs. And the same JCB was leased back by B to A, and the lease is an operating lease. In the context of AS 19, explain the accounting treatment of the profit or loss in the books of A Limited if first one, sale price of 24 lakhs is equal to fair value. Sir, book value 20, sale price 24, fair value is also 24. Gain or loss 4 lakhs will go directly to P&L. Next, fair value 20, but sale price is 24 lakhs. Oh, very good. Sale price is more than the fair value. Which case is this? Third case. In this, fake profit will be there or not? First identify what is your actual profit. Carrying amount is how much? 20. You sold it for 24. So overall the profit is 4 lakhs. In this, how much is genuine profit? How much is fake profit? Genuine profit is 0. Why genuine profit is 0? Fair value 20 lakhs, which is equal to your carrying amount. So entire profit is a fake profit. A fake profit you have to defer and amortize. Do you remember this? Chalo, read it and check the answer, safe side. Next, fair value 22 lakhs and sale price is 25 lakhs. Again, same scenario, no? This time my original profit is how much in this case? 5 lakhs. If 5 lakhs is genuine profit, 2 lakhs, fake profit, 3 lakhs. What should happen now? 2 lakhs will go to P&L right now. 3 lakhs will be deferred and amortized to the credit of P&L account. Next, fair value 25 lakhs, sale price 18 lakhs. Wow, this is which scenario, sir? Selling price less than fair value. Okay, am I getting gain or loss? You check. Loss we are getting. Book value 20, selling price is 18, pakka loss. Ante case 2 lo last case, that means E scenario. Isn't it? E scenario answer depends on whether your loss is compensated or not compensated. Not compensated, P&L immediately. Compensated, then defer and amortize. Sir, nothing is said. No, sir. Write both. Write both. You cannot assume and all. One line, what assumption? Instead of writing that stupid assumption, you can write the answer only, no? That you do. When fair value of lease machine is 25 and sale price is 18, then loss of 2 lakhs is to be immediately recognized by A Limited in its books, provided, see, loss is not compensated by future lease payment. I suggest in this case, add one more line also. If this loss is compensated by future reduced lease rents, then defer and amortize the loss. Answer is a complete one also. Next. This one you tell me you are pro, ultra pro, max. Fair value is 18 lakhs and sale price is 19 lakhs. Don't see the answer, I'll kill you. Sir? You don't want to be pro, huh? Okay, listen. Before I told you all this drama, I told you one more point. Go back, go back, go back, go back. Here, not here. Here. When an asset is held for sale, if the carrying amount of the asset exceeds the fair value of the asset, first or last book change, sir. Sale, forget about stupid sale. Sale we'll see later on. First of all, if you are fat, then first book a loss. Brackets low, the impairment loss. What is impairment loss? AS 26 time I told you a bit. Impairment is not part of your syllabus. And impairment standard was not there when AS 19 was coined. Therefore, our wording is not included in this. Have impairment loss. Ni value 98. How are you sitting in the balance sheet at 100? So you are fat already. Ochayal sir, 10 lakhs. First you bring that. Likewise, is some low. Ni value 18. But you are sitting in the balance sheet already at 20. Forget about sale. First or 2 lakhs you come to P&L account. Once you come to P&L account, what is your revised carrying amount now? 18. Sale prices, fair values. Ideally your profit should be 0, but you are getting a profit of 1 lakh. Fake profit again? Answer, defer and amortize. Adi sir, atla handle cheyali. Very good question. Next, this one you answer and feel good about yourself. Do. Same samayte vadiledam sir, not same. Sold JCB WDV 50 lakhs to Y Limited 60 lakhs and the same JCB was leased by Y to X. The lease is an operating lease. Comment according to the relevant accounting standard if sale price is equal to fair value. Entire profit will go to P&L immediately. I will not answer this and insult you. Second one. Fair value is 50 lakhs but sale price is 45 lakhs. What is the book value by the way? Fair value also 50 but sale is at 45. Are you suffering a loss? How much loss? 5 lakhs. Your answer should be of two scenarios. Loss compensated, loss not compensated. Next. Fair value is 55, but selling price is 62. Your gain actually is 12 lakhs. In this, genuine profit is 5 lakhs. Fake profit is 7 lakhs. Genuine profit will go to P&L. Fake profit will become a liability, deferred and amortized. Fair value 45 lakhs. Selling price 48 lakhs. Book value 50. The range 45. You are already overstated. First of 5 lakhs you come to P&L. Once you come to P&L, carrying amount also will be 45, fair value 45, but sale price is 48. Ideally, you should get zero profit, zero loss on sale, but that fellow is giving you 3 lakhs profit. Adi mottam fake profit, defer and amortize. There you go. Okay, next page. I just got shock of my life. Okay, fine. A question will not come, sir, but still safe side. Since we discussed this concept, go through it once. A manufacturer offers outright sale as well as lease agreement. Normal selling price of a machine with normal credit period of 3 months is 20 lakhs. That is normal selling price. Adi if he gives it on lease, the lease period covers the substantially whole life of the machine at an uniform lease rent of 6 lakhs per annum. Indirectly is telling that lease is a finance lease. Life of the machine is 5 years. Okay. Normal cost of sale is 16 lakhs. The cost of goods sold. Residual value is nil. How should the total profit be distinguished between normal profit and finance income? And IRR he only gave it as 15.24%. Listen, sir. What is the cost of making the asset for you? 16. If you sell normally 20 lakhs you will sell. How much is your genuine profit on sale? 4 lakhs. Now to this fellow, you did not actually sell it. You have leased it. That too it's a finance lease. You are a lessor, but you are not any ordinary lessor. You are a manufacturer lessor. When you are a manufacturer lessor, there are two components you have to recognize. One, profit. The other one is interest income. Profit, how much you have to recognize right now is 4 lakhs. 4 lakhs is difference between your normal selling price minus cost of making the product. So 4 lakhs immediately you will recognize. Now, how much will you collect from the lessee? 6 lakhs you will collect each year. Like that for a period of 5 years. 6 into 5, 30 lakhs. What is the market value of the asset if sold today? If somebody buys today, pays me today only, I will offer at 20 lakhs only. But he is paying over a period of 5 years, so I am collecting from him 30 lakhs. How much extra am I collecting? 10 lakhs. 10 lakhs is nothing but your interest income only, no? He already calculated and he is telling that your IRR is 15.24%, meaning every year go and recognize interest income at the rate of 15.24%. So, in other words, I can just to explain it. What is the question number, sir? 11. It's just like any other sum, sir. There is nothing great. What is the fair value of the asset here? 20 lakhs. 1, 2, 3, 4, 5. Every year, that fellow will pay me an amount of 5 lakhs. 6 lakhs, huh? I'm sorry. 6 lakhs. Okay, 6 lakhs it is. These are my lease rent inflows. What he did is, he already worked out IRIL for you. He is telling that it is 15.24%. From a journal entry point of view, what you got to write is, what is it for lessor, no? Not lessor, let's see. Names he has given, no? No. Lease receivable account debit. How much lease receivable will you record, sir? 20 lakhs, which is net investment in lease. Are they fair value of the asset? You already know this. 2. Asset. Since the asset I only made, I will record it cost. I will recognize it cost 16 lakhs. 2. P&L. This is Profit on sale 4 lakhs. Now every year on this lease receivable, I have to recognize interest income and have to recover lease rent and all. Our interest income is recognized at the rate of 15.24. Like that, if you recover over a period of 5 years, our lease receivable account balance will become 0. That's what he is trying to tell you. When we discuss the finance lease accounting in the books of lessor originally, we had only this entry. And that entry was tallying also. Why that entry was tallying is, before you wrote this entry, lessor fellow will go to the market and he will buy an bloody asset at 20 lakhs. Our asset he will give away like this. But in this scenario, he is not buying the asset, he is making the asset. Therefore, cost 16 lakhs untum, sir. This will be 4 lakhs. This in fact I wrote it as asset, ideally it should be sales. But fine, leave it. It unnecessarily corrected, leave it. So guys, that's all for your leases standard. There's nothing else. Is there any question left? Okay, one moment. So guys, this is your RTP which is released today. In this, some questions are there on AS19. Let us see what question is there. You see whether you are able to understand that or not. Okay, fine, will not write. It will give protected. I know how to remove protection. Anyway, later on I'll see. When Limited has entered into a 3-year lease arrangement with the Tanya Sports Club in respect of a fitness equipment costing 17 lakh rupees ka overaction. Adanta sir exam lo mental pressure creation ke they do all that. Ugly numbers, decimals and all. What's the use of that? And 17 lakhs, can't I see that? Anyway, leave him. Sir, a 3-year lease, sir, asset cost adi, and the fair value. The lease payments are to be made at the end of each year are structured in a way that the sum of PV of lease payments and that of the residual value together equal the cost of equipments leased out. Okay. UGRV also he has given, which is 1,33,500. The asset would revert to the lessor at the end of the lease. Let us see that. Given that the implicit interest rate is 10%, you are required to compute the amount of annual lease payment and unearned finance income. Did we do this type of sum? Lease rent only, lease rent also we have to calculate, unearned income also we have to, did we do this kind of sum? As it is we did. Discounting factors he only gave. Don't apply your own annuity factor and all. Whatever discounting factor he gives, use that. Maybe he planned a round number for you. That's why it's looking like that. E sum is exactly similar to the sum what we solved in the previous session. 2 sums we solved in fact. That any sum you pick up, it will match. This sum you see, 6th sum. Assume lease rent is equal to X per annum. 3 years here also, sum also lease period is 3 years. Only thing is instead of 3 lakhs, this is 17 lakhs in this sum. UGRV, some other number is there. Discount using IRIL, X will come. Lease rent. He is asking, one is lease rent he asked in this sum, that we worked out. And then he is asking unearned finance income. Unearned finance income formula is GIL minus nil. So do GIL minus nil, answer is ready with you. Can you handle this, sir? Easy only. Okay, AS20 we have not yet covered. AS22, this and all will wait. Okay, AS26 we have covered. You can read this question for the time being. Read, sir. You are all pros, no? Answer. K Limited launched a project for producing product X October 2021. The company incurred 40 lakhs towards research and development expenses up to 31st March 2022. I told you at the time of discussing the same question that stupid uses the word R&D as wrong. Still he is shameless. He still using present future also. Due to the prevailing market conditions, the management came to a conclusion that product cannot be manufactured and sold in the market for the next 10 years. The management hence wants to defer the expenditure write-off to future years. Sir, you agree with this? Sir, if it is a research expenditure, anyway it will come to P&L. If he is talking all this nonsense, means it must be a development expenditure. Development expenditure can be capitalized and continue to remain so only if all the 6 conditions are satisfied. One of the 6 conditions is future economic benefits must be probable. In this case, the product cannot be manufactured and sold, and he is telling that means future economic benefits are not probable. Once you know that future economic benefits are not probable, what the heck are you doing in the balance sheet? Die now. P&L. Ochayal, sir. Oh wow, this is looking a little heavy. Let's read this. Nice name. Chaos Limited is in the process of finalizing its accounts for the year ended 31st March 2022. It seeks your advice in the following cases. Number 1. Chaos Limited entered into an agreement to supply 1 lakh face masks to D Limited by 30th April 2022, failing which it will have to pay a penalty of 10 rupees per item not supplied. On 31st March, Chaos Limited assessed that it could supply only 50,000 face masks to D Limited by 30th April. E type of sum did we do while doing AS29? If you have revised or not, I do not know, but a sum like this was there. You promised to deliver a particular quantity after the balance sheet date, but on the balance sheet date only you are very sure that a contract you cannot fulfill. That means a loss you are likely to suffer, and you can't avoid this. So loss you have to book. In this case, tell me, if you have to supply 1 lakh units, you are going to supply only 50,000. And another 50,000 ki you have to pay penalty. A fact you know on 31st March only. So go and book loss. How much loss? 50,000 face masks into 10 rupees, which is 5 lakh rupees. But I had to tell you, even though this is the answer given by CA for your exam, in CA final, same question is there. There, the answer is totally different. Okay, let me check what answer they have given in the RTP today, but the answers are quite contradictory. Anyway, Chaos Limited has filed a court case in 1415 against its competitors. We only filed a case. It is evident to its lawyers that Chaos Limited may lose the case, nice, and would have to pay rupees 3 lakhs being the cost of litigation. Very good. No entry or provision have been made in the books. Sir, I filed a case. Pakka case I will lose. Moreover, 3 lakhs I only have to pay. Do I need to create a provision or not, sir? Yes, very clearly he is telling, evident and a word should tell you that present obligation based on evidence available on the balance sheet date, it is probable that there will be an outflow or obligation is existing. Pakka provision you have to create. There is no escape from this. Next. A new regulation has been passed in 21-22 and the current year by the Healthcare Ministry to upgrade facilities. Very good. Deadline set by the government is 31st March 2023. And the 1 more year time is there from today's balance sheet date. Today's balance sheet date is 31st March 22. The company estimates an expenditure of 10 lakhs for the said upgrade. You know what is this upgrade? Smoke filter. Smoke filter question is upgrade. There, sir. Sir, smoke filter ki will you create a provision now? No. Why? Because time is still there. Huh? No, that is not the answer. No. Present obligation is not there until and unless I bloody buy the smoke filter itself. Unless I incur the main expenditure, why the hell will I owe any money to anybody? Past event is missing here. Future expenditure without past events, you are not going to create any provisions. The answer. Done. This will wait, 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 this will wait. Okay. Oh wow, read. AS5. Bela Limited, that should be beta, I may say. Who cares? Anyway, has a vacant land measuring 20,000 square meters, which it had no intention to use in the future. Very good. The company decided to sell the land to tide over its liquidity problems and made a profit of 10 lakhs by selling the land. Good. Moreover, there was a fire in the factory and a part of unused factory shed valued at 8 lakhs was destroyed. Fantastic. One gain, one loss. The loss from fire was set off against the profit from sale of land, and the profit of rupees 2 lakhs was disclosed as net profit from the sale of asset. Do you agree with this treatment and disclosure? If not, state your views. Is some there? Did we cover this sum? 100% covered. In case of what you have to answer is, there are two extraordinary events happened. Both must be explained separately. If you offset them, you are hiding information from the reader of financial statements. Moreover, normally speaking, sale of land is an exceptional item, not an extraordinary item. But in this case, you are selling off your land to tide off your liquidity problems. that might hint a bad position on your going concern also. So hence explanation is needed separately for both the events. You cannot offset like this. AS follow as it is, sum is there. Explain accounting treatment of contingent gains as per AS4, contingencies and events occurring after balance sheet date. There is no recognition of any kind of contingent gain. Are a contingent loss only I am not recognizing, gain why will I recognize? That's it, sir. So whatever standards we have covered, based on that, whatever questions are there here are already covered with us. Likewise only, exam whatever questions will come also will be covered by default in this. Sir, after this much of effort, there is nothing else, sir. You just be confident on what we are doing and revise properly. Okay guys, that's all for today. We'll see you tomorrow. Bye bye.